The world of cryptocurrency is brimming with new coins and investments every day, and we have heard of the names gold, BTC, and fiat before. They both boast of their own advantages, but how about on the good money principle? How are they better than each other in multiple different aspects? But first, hello and welcome back to the channel. This is Financial and Investment Wisdom, and we're back with another incredible video. Here, we talk about the world of cryptocurrency, finance matters, and investments. So please subscribe to the channel and enable alerts to be notified of each new upload. The gold standard, fiat money, and Bitcoin. These are names that in this video we will introduce to you. We will tell you what they are, what they do, what their advantages are, and how they can benefit you in the area of cryptocurrency investments. They're all beneficial financially, but the question is, in what exact ways? How do they really do us good? Well, you're here to find out. So, what are we waiting for? Without further ado, let's begin. The gold standard. The gold standard is a monetary system in which the value of a country's currency or paper money is directly linked to gold. Countries agreed to convert paper money into a predetermined amount of gold under the gold standard. A country that follows the gold standard establishes a fixed price for gold and buys and sells it at that price. The set price is used to calculate the currency's value. For example, if the United States sets the price of gold at $500 per ounce, the dollar is worth 1/500th of an ounce of gold. No government presently employs the gold standard. The gold standard was entirely replaced by fiat money. The dollar is fiat money in the United States, and the naira is fiat money in Nigeria. The appeal of a gold standard is that it removes control of the money supply from the hands of flawed humans. A community can avoid the horrors of inflation by following a simple rule with the physical quantity of gold functioning as a limit to that issuance. Monetary policy's purpose is to promote a stable monetary environment in which full employment can be realized, as well as to prevent inflation and deflation. A cursory look at the history of the United States' gold standard demonstrates that when such a simple rule is followed, inflation can be avoided. Yet, rigorous adherence to that rule can lead to economic instability, if not political turmoil. The rise of the gold standard. The gold standard is a monetary system in which paper money can be freely exchanged for a fixed amount of gold. In other words, gold backs the value of money in such a monetary system. As the introduction of paper money caused certain complications, the creation and formalization of the gold standard occurred between 1696 and 1812. In 1789, the United States Constitution granted Congress the sole authority to create money and to regulate its value. Creating a unified national currency allowed for the standardization of a monetary system that had previously relied on circulating foreign coins, primarily silver. England became the first country to formally adopt a gold standard in 1821. The century's significant expansion in global trade and production resulted in large gold discoveries, which enabled the gold standard to survive well into the following century. Because gold was used to resolve all trade imbalances between nations, governments had a strong incentive to store gold for more difficult times. These stockpiles are still in existence today. Fiat money. Fiat money is a type of government-issued currency that is not backed by a physical commodity like gold or silver, but rather by the government that issued it. The value of fiat money is determined by the relationship between supply and demand, as well as the stability of the issuing government, rather than by the value of the commodity behind it. The majority of current paper currencies, including the US dollar, the euro, and other major global currencies, are fiat currencies. As a result, fiat currencies only have value because the government sustains them. There is no utility to fiat money in and of itself. Fiat currency arose when governments issued coins made of a desirable physical item, such as gold or silver, or printed paper money that could be redeemed for a set amount of a tangible product. It is a good currency if it can perform the functions that a country's economy requires of its monetary unit, such as storing value, providing a numerical account, and enabling commerce. It also has a great seigniorage, which means it is less expensive to generate than a currency that is directly linked to a product. But there are disadvantages. The 2007 mortgage crisis and accompanying financial catastrophe tempered the idea that central banks could always prevent depressions or severe recessions by managing the money supply. Because of the restricted amount of gold, a currency related to gold, for example, is often more stable than fiat money. Because of its infinite supply, fiat money provides additional potential for the formation of bubbles. Why is fiat money so valuable? In contrast to commodity-based money such as gold coins or paper bills redeemable for precious metals, fiat money is wholly backed by the government that created it. One reason this has merit is that governments need you to pay taxes in the fiat money they issue. Because everyone must pay taxes or face heavy penalties or prison time, people will accept it in exchange, a practice called chartalism. Other money theories, such as the credit theory, contend that because all money is a credit-debit relationship, it makes no difference whether money is supported by anything to preserve value. Prior to the 20th century, most countries used a gold standard or commodity-backed currency. However, as the extent and scope of international trade and finance developed, the restricted amount of gold pouring out of mines and into central bank vaults could not keep up with the additional value being created, causing major disruptions to world markets and commerce. Fiat money allows countries more leeway in managing their own currency, setting monetary policy, and stabilizing global markets. It also permits fractional reserve banking, which allows commercial banks to quadruple the amount of money on hand to satisfy borrowers' demands. The gold standard system versus the fiat system. The words gold standard, as the name implies, refers to a monetary system in which the value of a currency is determined by gold. In contrast, a fiat system is a monetary system in which the value of the currency is not based on any physical product, but is instead free to fluctuate dynamically along with other currencies on the foreign exchange markets. The term fiat comes from the Latin fieri, which means an arbitrary act or decree. According to this derivation, the value of fiat currencies is ultimately determined by the fact that they are declared legal tender by government order. Prior to World War I, international trade was conducted on the basis of what has become known as the classical gold standard. Physical gold was used to settle trade between nations in this arrangement. Gold was amassed by nations with trade surpluses as payment for their exports. Nations with trade deficits, on the other hand, saw their gold reserves drop as gold flowed out of those countries as payment for imports. Hey friend, we've made it halfway through our list, and we sincerely hope you've enjoyed it thus far. If you have, please give us a thumbs up and turn on notifications to be notified of new uploads. What do you think of the information so far? Let us know your opinion in the comments below. Let's move forward with the video. Bitcoin. Bitcoin is decentralized digital money that was first introduced in January 2009. It is based on the principles presented in a white paper by the enigmatic and pseudonymous Satoshi Nakamoto. Bitcoin promises reduced transaction fees that are lower than standard online payment channels and, unlike government-issued currencies, is run by a decentralized authority. Bitcoin is classified as a type of cryptocurrency since it employs encryption to ensure its security. All Bitcoin transactions are validated by a large amount of computing power through a process known as mining. Bitcoin is not issued or guaranteed by banks or governments, nor is it valuable as a commodity. Despite the fact that it is not legal tender in most areas of the world, Bitcoin is extremely popular and has sparked the creation of hundreds of rival cryptocurrencies known as altcoins. When Bitcoin is exchanged, it is typically abbreviated as BTC. Why is Bitcoin valuable? In barely over a decade, the price of Bitcoin has climbed rapidly, from less than $1 in 2011 to more than $68,000 as of November 2021. Its worth is determined by a number of factors, including its scarcity, market demand, and the marginal cost of production. As a result, despite its intangibility, Bitcoin commands a high valuation, with a total market capitalization of $1.11 trillion as of November 2021. Gold standard versus Bitcoin standard. The gold standard was a monetary system in which a country's currency was linked to gold. The Bitcoin standard is a monetary system in which the currencies of various countries are linked to Bitcoin. Either way, going back to how the gold standard isn't as widely used anymore, the Bitcoin standard wins in this category. Fiat versus Bitcoin standard. Bitcoin is far more divisible than fiat money. One Bitcoin can be divided into 8 decimal places, with constituent units known as satoshis. For ordinary use, most fiat currencies can only be split into 2 decimal places. The verdict. To sum it all up, in nearly all aspects, Bitcoin wins by a long shot. This is most likely because it's more widely known and most commonly used by investors and common people alike. Though, if we're talking about government usage, the fiat currency still stands up to its role. Either way, all of these 3 names contribute to our economy and the currency world in ways that all of us may not usually see, but we can all benefit from. We differentiated Bitcoin, fiat, and gold from each other. We also gave you the sweet advantages of all so that you would know the benefits of each one better. So what do you think? Let us know in the comments below. We'd love to hear it. That concludes today's video. Please subscribe to the channel and enable alerts to be notified of new uploads. This is Financial and Investment Wisdom, and we'll see you in our next video.